we're going to be touching on like four major things. We're going to be touching on real estate. We're going to be touching on trust. We're going to be touching on life insurance. We're going to be touching on um, business structures and how the wealthy, like the Rockefellers and Trumps, they all do this. And we're gonna show like this is not something that is just out there for the wealthy, right? Crazy ultra billionaire wealthy. This is stuff for the average and everyday people. If you're making under 500 grand, it's going to be awesome for you, right? If you're making under 100 grand, this stuff can still help. And I want to have structures and stuff at the end to really to see to show you. But no matter if you're making under 500 grand or over a million, there's a lot of this stuff that you can that you can use that is going to be awesome. Yeah, because at the end of the day, if you want to get out of the grind and build wealth, you want to be a millionaire, there's a guaranteed way you can do that in 10 years. And I'm going to show you guys how to do this. There's a couple examples and of how we're going to do it. So real quick, I'll just jump into my story. I mean, some of you guys know, most of you guys know me. And my mom's Filipino. I was born in the Philippines. My dad's from Detroit. Everything, we came here about 2000. And what ended up happening, we're a good middle-class family. Around 2008, we ended up short selling our house. We lost our house, right? And what ended up happening to me, I was like, there has to be some kind of change, right? So I went to school in West Hills. I had a teacher say, hey, there's this book called Rich Dad, Poor Dad. You know Mr. Payton, right? Don't you know him? Mr. Payton said, hey, there's this book called Rich Dad, Poor Dad.
Yes.
Look at this book. And what I saw in that book is said, hey, most real estate people are some of the most millionaires in the world. So I said, well, I'll just go all in. And the first 3-4 years were crazy. I was pretty much homeless. What's up, Alex? The first 3 or 4 years, I was working with that guy Alex at the Palace right there.
What's up,
Right?
bro? How was you?
What's up, sir? Right, we look alike. We got that hair going on. Right, I worked at the Palace part-time when I started real estate. Alex was there, Apple was there. We had a lot of Leandro was all there. It was pretty fun. But yeah, family lost their house, and I said, hey, I have to change something. So when I jumped into real estate, really tough, and what ended up happening from there, it took 3 or 4 years and really finally started making some traction. And then once we started making, multiple 6 figures, we just said, man, we don't want to make any more because we got hit with these crazy tax bills. And we're like, why are we going to make more money? It's just more money, more problems, right? And so as things went on, I saw Trump and Hillary Clinton debating. And Hillary Clinton's like, hey, Trump, you wrote off $1 billion in taxes, you tax fraud dude. And he said, that makes me smart. He's like, I use a system that you guys made up and you do it and all your cronies do it too. So I'm just using what you did. You can change it, but you're not going to because you and your friends use it. And I said, man, what kind of system is that? Right. So what we're going to go over today is a lot of that system. We're going to touch on 2024, real estate 2025, where I've done some heavy research on the Fed and interest rates and things where we're going. And then we'll touch on that. And then we'll look at these trust structures and a lot of the stuff that I've met for the last 3 years. I met with attorneys, CPAs, financial advisors. I've met with some attorneys all over the United States, CPAs all over the United States, and they've got some really, really cool stuff. So we're just going to touch on 2024. I mean, it was high interest rates. You guys can kind of see. I'm going to try to move this on the bottom of the screen. Well, we ended up I think really like Jesus died, and it was like BC and AC, right? After Christ, before Christ. Like, I think that's what 2020 really is. So after 2020, I really do believe anything really before 2020 is a different world. And now we've just come across a just completely new world. So if we go back too far, it's not going to really matter. I think 2020 is, you look from 2020 forward. And if you guys can see here, if I can move this, there you go. We ended the year at 370. That's in December, and in 2020, we were at 275. So that's the average household that closed in December. So we had a 34% gain on housing prices, right? But our income didn't go up 34% in 4 years, right? That's pretty crazy. And then the number of units sold too. In 2020 at 149 sales. This is just December, right? We had about, in Kings County, single family, we had about 1,200 homes sell in the whole year. But this is just for the month. So you can kind of see, like, after 21, when interest rates kind of went up, I mean, we just staggered down. And I honestly believe, like, if you guys look at this right here, the Fed met yesterday, and we have a new administration, the Trump administration coming in, and not to be political, wherever you're at on the fence, like, Trump's pressuring the Fed to like, hey, lower interest rates to 3%, right? We're gonna do all these things, lower them. The Fed said, we're not doing anything right now. We're gonna keep it as is. Powell said, hey, the rate cuts depend on further inflation progress. Like he said, this is a good economy, right? He's like, I'm not going to lower interest rates because this is a great economy. And I'm like, man, if this is a great economy, like we better watch out because if anything happens, it's going to be crazy. So the big things that we have another Fed meeting on the 19th. They said there's a strong labor market, no urge, no urgency to lower interest rates. Trump is frustrated and he vows to lower inflation himself. And I just want to make sure you guys know that the Federal Reserve is a misnomer, right? Like there's no reserve. They have no reserves, right? The Federal Reserve has no reserves and they're not a part of our government. Like it's not a part of our federal government. So they have no money and they're not a part of the United States. They're a completely separate entity from the United States. So Trump has no control over that. He can't fire Jerome Powell if he wanted to, right? So I just think um, people think that's a little bit different. So anyways, um, Powell avoids speculation on economic impact. Really, at the end of the day, if you listen to like the 50 minutes of questions that he answered, with everything that's changing, like Trump is trying to do the ERS, like External Revenue Service. He took over and kicked off a whole federal digital service and made it Doge, right? He did that really like day one. So there's a lot of changes. So they're holding still. Um, so really the things to look out for this year, look at the inflation reports, understand low interest rates mean, high impact, I mean, how interest rates impact the loans and prepare for any economic shifts. We really don't know. Like, personally, I think it's going to be vanilla this year. 2025 is going to be vanilla. 2026, I think, is when we're going to see some hyperinflation. You're going to see like they're going to be revving up in 2026. You're going to see things really skyrocket through the roof. We're going to touch on this. I know it's a little bit blurry, but we collect as the United States around 5 trillion in taxes, but we spend about 7, right? So I don't know. I mean, that's pretty crazy. We overspend by almost $2 trillion a year, right? So the United States, on top of overspending, there's 3 trillion coming up due on the notes and bills that we have out. So it's like if you're making $100,000 and you have to borrow $40,000 on credit cards every year, right? That's kind of what the United States is, but you have $700,000 of credit card debt, right? And that's just kind of the mass amount of kind of what's going on with the United States. So we are in a very, very delicate time right now, where if anything can happen, I mean, Doge is going to cut expenses, but I mean, they saved, did you guys see yesterday? Like the new press secretary, she's like, there was $50 billion, I think that was going out for condoms in Gaza. She's like, we stopped that, I was like, why are tax dollars spending on that? So you're going to see little things like that, but it's going to be like, instead of getting $40,000 a year extra, right? You're only going to get a $25,000 a year, right? So it's really not going to make any difference, right? And with the 5 trillion that's going on with the Fed, honestly, China doesn't want to buy any more of our money. Japan doesn't want to buy any more of our money. So either we're going to have to make it more appealing and raise interest rates for them to buy more of our money, or the Fed's just going to cough it up. And what's going to end up happening is just massive inflation over the next number of years, because the Fed rather have massive inflation than have a crazy recession, right? So my prediction, 2025 will be very similar to 2024. Interest rates, they said, are only going to drop twice. So you're really going to be floating still around 6-ish for our interest rates for loans. So, but 2026, you'll probably see it drop more, and you're going to see probably a lot of rapid inflation from there. So let's jump into this stuff, right? This is what I know, the meat and potatoes of what you guys are wanting to know: how to avoid taxes, 100% legal. I've met with attorneys, I've met with CPAs, I've met with financial advisors, and I've really looked deep into a lot of this stuff. I've made plans, and I've sat down with them and had them vet these plans, and These are very legit. I'm not a financial advisor. This is not financial advice. Let the professionals do it. I'm just summarizing it. And then if you guys have questions, like we can jump in, right? So the way that the billionaires do it is this. They take business structures, right? So if you are a W-2 employee or if you're a business owner, right, you can, if you're not a business owner and you're a W-2, you should open up some kind of structure, right? If you're making under 100 grand, you should open up like an LLC taxed as an S corp, right? If you're making under 60 something thousand, you can just do a regular LLC. And I want you guys to understand businesses and trusts, they're pretty much the same thing, right? So in businesses, you have a CEO, and in a trust, you have a trustee. They're very much the same thing. They're just tax loopholes, and we'll talk about that in a little bit. So how the billionaires do it, they have different tax structures, and they take those tax structures and they funnel their money through them. There's a K1 that just means passive income. If you're a tax nerd, those are the things. They use write-offs. The trust deducts all expenses, right? But on the bottom, you can't do food, fashion, fun. You write that stuff off in your LLCs, right? What you can do is you defer taxes in perpetuity. That means forever. So you don't have to pay any capital gains on real estate, which people don't know that, right? I just learned that recently talking to the attorney. He's like, you do not have to pay any capital gains, Thomas. And I'm like, what are you talking about? He's like, yeah. He's like, I do it all the time with multimillionaires. I do that with their crypto too. He's like, we get their crypto, and we'll look at that in a little bit. We get their crypto, we sell it to the trust. The trust sells it. They make it, instead of paying 20, 30%, 50% capital gains with crypto. They pocket all of that, and they do what in the middle right here. How they get the money back out is they use whole life insurance or IUL insurance, right? So I talked to a friend yesterday. She's like, dang, Thomas, I wish I would have known this before. I just paid $100,000 in capital gains. I sold some properties. I just sold, I just paid 100 grand in capital gains. And I'm like, well, I mean, too little too late now, right? You already paid it. But if she didn't, you could have put it in your trust, and then you pull a lot of that money out using whole life insurance. That's how you become your own bank. They talk about, infinite banking and things like that. That's how the billionaires use a strategy, like Trump, Elon Musk, and that's how they have these foundations that keep on going. So we're going to look at this. We're going to look at an example, like the secret, like what Rolex does. So Rolex, when you buy a Rolex, right, the Rolex is a foundation. It's a church, if you guys don't know, right? Rolex is the company is a Hans Wildorf Foundation, right? And it's a private charitable trust. So when you pay and you buy a Rolex, they take that money and they throw it into their church foundation, right? And they make all those payments are all tax deductible, right? They don't pay any taxes on any of that stuff. Starbucks does the same thing. Nike, they all do the same thing, right? Some of them have them in the Cayman Islands and have all these crazy stuff, but this is what the billionaires do. They use trust structures to put their money into, and we've, got very blessed that we've gotten connected with some great life insurance agents, CPAs, and tax attorneys who implement this stuff, right? So if you guys are selling stuff, or we'll go into some later, some examples, but this is just, I wanted to kind of show you guys, this is how it's not how much you make, it's like how much you keep, right? And then we talked about Bitcoin earlier. You can throw your Bitcoin into a trust. This is not financial advice, guys, but XRP, Bitcoin, Ethereum, Pepe, AVAX, they're going to go to the moon. And historically, like this month and next month, you're going to probably want to buy this stuff and then probably sell it in the next 3 months, because then it's just going to go bonkers. It's really going to go bonkers, especially with this new administration. Not financial advice. Tiala is the one to talk to about this, but I just listen to her, and we just put money into whatever she says, right? But you can legally put 100% and defer 100% of your capital gains forever of your crypto and your real estate by just simply taking it and putting into very specific trusts, right? So we're going to talk about how you put your assets into trusts really quick. So when you sell it to your trust, there's two different trusts. Irrevocable, meaning you make all the rules and then you can't change it, right? That's how your legacy foundation does, is if you have these rules and saying, hey, if once I die and this happens, like this is exactly what's going to go on with all my money and everything, right? That's irrevocable. You can't change it. Revocable is, I can go in and change it back and forth. Like, hey, my kids, I didn't put this thing in because my kid's acting up, but now they're acting up. I can change it. That's what you can do with a revocable trust. Irrevocable, you can't. You set it and you can't change it, right? So that's how. So let's go to the top right, primary house. How you sell, you quit claim deed your house to your trust. A car, you use a bill of sale. You sell it to your trust. Crypto and other assets, you do a bill of sale before you sell it, so you don't have to pay any capital gains, right? And what ends up happening is you control everything, but you own nothing, right? So we're like, hey, Noe, you have all these assets, right? Your name's nowhere on there, but you have control of all of them, right? So the benefits are like, the protection from lawsuits, creditors, divorce, the IRS, lawsuits. Man, that's really a big one. And your assets are locked and protected and no one can get them. So we're going to go into some advanced strategies on here, and I met with some people, and we were able to do some really cool strategies. So this is called accelerated depreciation. And so like the things I told you about earlier, real estate is a big thing, which you're going to have to be wealthy. The other thing is going to be trust structures. You're going to have a business, and you're going to have life insurance. You have to need all those to have this whole plan. Because essentially, like, this is the normal stuff, right? You buy a property, you have a rental, you can depreciate it over 27 and a half years, or a commercial 39 years, right? You're depreciating, $3,000 a year for this stuff, right? When you do this thing called bonus depreciation, it's in section 168K. For probably Rick Rossiter is going to be writing this down, right? Rick, I'll send you this. I know you're going to want to look up the tax codes. All right, so I put those in for you so you can read them, right? So that's in the tax code. That's where it says how to do this exactly and all the rules. A lot of rules. There's a lot of stuff in here, but I'm just going to touch on it. But instead of depreciating your property over 27 and a half years, you can, a good cost segregation study can do it in about 30% in the first year. So you can take, instead of 27, you can depreciate in about 4 years. And you're like, Thomas, why would I want to depreciate in 4 years? Well, I'll show you in a little bit. So with the stuff on here, there's a lot of rules on here, right? So the only way that you can do this stuff, some people think if you can only do it on Airbnbs, but you can also do it on regular rentals, right? So there's very specific rules. Like there's a 100-hour rule right here. There's a 100-hour rule. Like you must at least work 100 hours if you're going to qualify to do this. Like, and no one can work more than you, right? Or a 500-hour rule. You can participate in at least 500 hours a year. Or if you're a real estate professional, which a lot of us are in real estate here, you can qualify as a real estate professional status, and then you won't have to, and you're able to do this stuff. So the bonus depreciation, again, that's there for you, Rick. 168K in the IRS code. It's like 78,000, almost 80,000 pages, and it is made to be confusing. Like this stuff is made to be confusing. So material possession test, outline, all that stuff. I put it there for you. I'll email this out if you guys really want to dig into that, but it's kind of boring. So we're going to go into a couple of scenarios. We're going to check out the Jones family, right? The Jones family, right? Jones family, W-2 income, making 200 grand. They have a rental property, right? And then we're going to show them how to do a LLC tax strategies scenario. And we're going to do a before and after they do this stuff. They have 2 kids, right? And then also we're going to put this crazy scenario, right? And right now, the thing is with rental properties and everything, right? Property prices are up, interest rates are up. So we look at this, the Jones family, they bought a rental for $430,000. Their mortgage is $3,300, and they can only rent it for $2,300 a month. All right, so they're losing $1,000 a month. That doesn't seem like a good deal, right? And, so they're losing 12 grand a year. But this is what the wealthy do and why they put their hats on. The wealthy look for appreciation, right? With things. A lot of us, we just look for monthly cash flow. The wealthy look at this, and then they look at how much can I deduct, and that hyper depreciation, which is kind of in the middle right there. So I'll go a couple line by line. If you guys have any questions, let me know. But you're able to create an LLC, right? Throw it in your LLC, and then you can use that as you're qualifying for the hyper depreciation, the cost segregation. If you didn't know this, you can have a separate management company. It has to be a single member LLC, right? You can hire your kids if they're under 18. and you can pay them right now $14,600 without filing a W-2, right? So you can, and then you use that as a write-off. And so you can deduct 29,000 using the Augusta rule. If you never heard of the Augusta, it's like a golf tournament. You know, I believe it's in Georgia. And what they do, they just rent out their houses there for a couple weeks as all the golfers come in, everyone, all the super wealthy people leave, and then they just rent out their houses. And because all their buddies are in Congress and stuff, they're like, hey, make this rule when we leave, let us do this tax free. And so that's what they did. They freaking put Augusta rule. So you can rent your house out to yourself, to your business, right? For, it says $1,000 a night, right? So whatever you can rent out, like an area, like if you go to the Comfort Inn and rent out their thing, if they provide food, if they provide like utensils, plates, papers, you can kind of get those numbers. So whatever an ordinary expense would be, you can do that in your place. We just put $1,000 here. Cost segregation is the big one. The first year on this property, it doesn't make sense, right? It doesn't make sense because they're losing $1,000 a month, but they can write off 30% in their first year, which is $129,000 against their $200,000 income, right? So they're paying taxes originally on 200 grand. Now they just depreciated their, you know, just in using the cost segregation, they depreciated all, you know, you're right, 71,000 or whatever, right? So you're only paying taxes on that, which is crazy. And what people won't tell you, the wealthy won't tell you, is this, is depreciation. When you do depreciation, lenders add it back into your qualifications to qualify for houses. So that's why this is, the issue that I had, I just wrote everything off, and then I got burned because we couldn't qualify for stuff, right? So we just did a lot of private money and a lot of DSCR, different loan and programs. But if you have people who are W-2 and they need that income, this hybrid depreciation works great. Bonus depreciation on your SUV. If you buy a car over 6,000 pounds, you can deduct, you know, nearly all of it. You know, they're sunsetting it a little bit. So I think it's around 80% now, but if you buy it for 60,000, you can nearly write it off that whole first year. And instead of having birthday parties, have networking parties, right? You do the same stuff. You do what you're doing already, and then you just categorize it in a different way, right? And then you can contribute to your retirement accounts. And this is a crazy one, right? So the trusts, what you can do if you're a W-2 employee, if you want to write off more of your income, you have an ecclesiastic trust, you know, and that's, yeah, Book of Ecclesiastes, right? It's it's a church, right? And that's what, you know, that's what a lot of these people are. Like that's what Rolex is. That's what all these companies are, Ecclesiastes trusts. And you're able to donate 30 to 60% of your adjusted gross income as a W-2 employee to there, and then write all that off, which is not a lot of people know. So on the left side is what they were paying before in taxes. The right side is what they're paying after in taxes. So just by doing a little bit of tax structure and stuff like that, you know, they're able to save, what is it, $18,000 on that. And that's, I mean, that's not bad. By just, you're doing all the same stuff you're doing. You're going on vacation, you know, it's a work trip with your board of advisors, which is your kids, your family, your friends. You know, if they're your board of advisors, you can do very specific stuff and go on vacations, right? So, I mean, it's a huge difference. Taxes paid, 29,000, you know, in monthly 2,400 versus, you know, 15,000 in the year, because you can't get rid of that if you're still W-2'd. So 12,000, you know, 1,200 a month. I mean, you're freeing up all of that money to do what? With hopes that you're going to take that and you're going to put it in a savings account. And the whole strategy is to be a millionaire in 10 years. You save that money because you were spending it anyway with the IRS, save that money, and then buy a house every 3 or 4 years, right? That's the whole hope. This one gets really exciting. The Martin family, right? They're you know, they are a sole proprietorship, and we're showing them how to go into a LLC, but they make a little bit more money. Combined, they make $350 a year, have 2 kids. So same thing here. You know, they buy a rental property, it's negatively cash flowing $1,000 a month. They implement all of this stuff. And because we showed them how to, we got them with the attorney that opens them up an S Corp, right? Because they're making decent money. They use the Augusta rule, they do all this stuff. They hyper depreciate it, use the SUV, all of those things. Like, look at this. Like, this is a big one, right? So the more money you make, the quicker you can become a multimillionaire. So you make 250, 350 grand, or you even 100 grand, 150, you're able to do this stuff. If you're making under 100, you can do all of this. Your just numbers will be a lot smaller. In this case, all of the same stuff, sole proprietorship versus an LLC, tax strategies, they saved $71,000. Like this is 71 grand that they were paying already in taxes, that all you're doing is you're just setting up your LLC, you're setting up your trust structures, your insurance, you're doing all of that stuff. And it's coming full circle, and you're getting that money back. And hopefully you can pay off debt with that stuff, put that with a financial advisor into like a high yield savings account. Because I mean, we all know that if we see it in our bank accounts, we spend it. I mean, that's just the reality. We see it in our bank accounts, we spend it, and then so we have to have it in separate bank accounts, right? So that's some of the biggest things that what I've seen. So just to recap again, the four big things: businesses, right? Setting up different LLCs, setting up trusts, um, life insurance, and real estate. Those are the things that just completely open up the world to, if you're making money, instead of paying the government, pay yourself, pay your financial team, right? I'm doing a probate right now. Depending on the trust that you set up, it could be $2,500 to 20,000, depending how, the crazy things you do on them. But I'm telling you right now, this one probate, I mean, they spent 25 grand, right? And I mean, the house is like $400,000. So with everything that's going on, the probate attorney charged them 25 grand, right? So you can either pay it now or you pay it later. You can be at a basic trust for $2,500 to $5,000. So I know this was a lot of information. I want to be, respectful for you guys' time. What kind of questions do you guys have? I know it was a lot of info on there. Mike, I know. Rick, what questions do you have? I know you got some questions on there. Did that kind of blow your mind a little bit?
Hey Thomas, this is Healy.
Hey, hey.
So if if my company was to purchase a commercial property, would you recommend us putting it under the LLC or putting it under a trust?
Yeah, that's a good question. So what I would say, I mean, you could initially put it in I'd put in your business name, and then you just essentially just sell it to your trust. Right. So you can put in your business name, you sell it to your trust. Because do you have a trust right now too, or no?
Not at the moment. So
Yeah.
if I was to do that, what would be the what's the incentive to do it that way?
Yeah. I mean, you could do it. I mean, unless you set it up, because I mean, you have your business set up already, right? So you'd want to get in your business name, instead of waiting for a trust to set up. I mean, how close are you to buying something like that?
We just did our highest and best, so we're waiting on a
Yeah.
response.
Yeah, so I would initially, like, if you were a ways out, I would say maybe you can just put it in your trust right away. But if you don't have a trust set up, just get in your business name and then just transfer it to your trust. And then, I mean, we're setting up a holding company in Delaware, right? And then so the holding company, the trust owns a holding company, and then that way our name is not on anything. I mean, it's a little confusing, but so our name is not on anything right now. If I look up, those junk movers, I'm gonna find you and all your stuff, right? So that's why, yeah, you for the best thing would get it into your business right now, and then as soon as you set up a trust, set it up, or if you go like this week to go an attorney right away, you can do something like that. But you want to at least protect yourself, right? That's just another layer of protection, because if it's in your name, I mean, they can trip on a sidewalk and sue you, right? But if you get it in your trust right now, and then or your business, and then you transfer it to your trust, right? That just gives you kind of like another multiple layers of making it harder to find you. And then if you do a holding company in like Delaware or Wyoming, or one of those states don't report the ownership. Like you have somebody who manages it for you there, and their name's on everything, your name's not on it. So if anyone tries to sue you and try to take your commercial building, they're they try to sue the commercial bill, they try to sue you, like they can't find you. Does that kind of make sense?
It does.
Yeah. I mean, it's super confusing. It's made to be confusing, right? It's super made to be confusing. So what I would do too, because once, let's say you, it's high, you're doing your highest and best and you get it. Same thing with, as residential, you can hyper depreciate the property. You can hyper depreciate it. So instead of paying taxes, are you paying taxes now? I know you're always busy. I see
Yeah,
your signs everywhere.
we will be paying taxes for last year.
Yeah. So I would look at doing that cost segregation study like I told you about, and then that way you can wipe out, I mean, especially, I'm sure if it's commercial is, a good amount, you can wipe out a huge amount of that very quickly and roll off for next year. You can roll off and not pay taxes. But if you guys, so this is something too, like we found out, and this is a little bit, a little bit crazier. We found out that you can go backwards 3 years on taxes, and if you own or if you had rentals for let's say 3 years, you can reverse go and redo your taxes backwards, right? So if you like, we owe back taxes, right? Let's just be transparent, like we do. Like we're learning this stuff, and so we're implementing it as we learn it. So we owe back taxes. So what we're looking at doing is going backwards. I met with the attorney and a CPA, and I've talked to the cost segregation guy to do the cost segregation studies. We already put a deposit down on doing this stuff, and you can go back 3 years and you can amend your taxes. So let's say, I owe 100 grand in back taxes. I can go backwards and then amend my taxes. I mean, it's going to shoot a red flag, right? It'll shoot a red flag. We'll get audited, but we shouldn't be nervous about being audited. I talked to the CPA. I talked to all of them, the attorneys, and they're like, nope, everything's 100% legit. Like this is by law. This is people do it all the time, right? You'll probably get audited, but like we'll do everything legit and you'll be fine, right? So we can go backwards 3 years and just wipe out our back taxes if you've had the real estate or the commercial properties, in the past for those years, which is, I mean, who's heard of that stuff? I mean, even the CPA is like, dang. He's like, no, you're right. Like yeah, you can definitely do that. He's like, yeah, we'll probably get audited and we'll just do everything right. We'll be fine. And I'm like, wow, that's crazy. How about you, Alex? You still at work?
Well, I'm at the office, brother. Hey, out of curiosity, is this are we gonna be able to rewatch this later?
Yeah, we got this recorded, so I'll probably just put it on YouTube later
Okay.
on. And yeah, I mean, just hit me up, dude. I mean, this stuff is like, this is why I'm bald, like, researching this stuff, right? Yeah, I mean, this is stuff that honestly we just did for us over the last number of years. I know Josephine's like, why are you always researching this stuff? Because I'm like, it's like it shouldn't be, this shouldn't be gate kept, right? And gate, it's a lot of gatekeeping on this stuff to make it super confusing for a reason. So yeah, man, I'm wanting to get it out. My goal is, and I mean, lenders are W-2 too, man. They can do this stuff. I mean, I would love to show lenders this stuff. Us as agents, right? Like, help each other out, because as you come up in the game like you are, man, like it helps, having people who've done it, before you, and like now learn from our mistakes. You know what I mean? Like, we've eaten a bunch of crows, so learn from our mistakes. So yeah, I'll post it on YouTube though.
100%, brother. Thank you, man. I appreciate you guys.
Yeah, for sure, man. I'm glad you jumped on, dude. Good seeing you.
Likewise,
Shay,
brother.
Shay on there, right? I see you on there, girl. Trinity, and she took off. Yeah, Shay, like with lenders, I forgot you guys are W-2'd, right? I forgot you
I'm
guys are
not.
W-2'd.
I'm
You're
not.
not?
No, there's like
What?
3 lenders in the valley that are 1099, and we're one of them.
Oh, wow. Heck yeah. So I mean, same thing with this. If you have rentals or stuff, just to hyper depreciate them. I found do you have any rentals?
No, not yet.
No.
Hopefully this
You
year.
should. Well, now with this stuff, um, all right, Trinity, now you got to take off. Yeah, this coming year, buy your rental. See you, Trinity. I owe you a coffee. Daniel, yeah, no, there is a way, so the same thing with with selling it to your trust and not having to pay capital gains. Yeah, it's the same thing. Yeah, so if you're flipping houses, and I know us flippers, right? Like, the way that we keep it going is like you just keep the money going. You know what I mean? Like you're just off to the next deal, and then you just use those expenses to write off the other expenses. I mean, that's just kind of how you do it, right? But if you didn't want to, if you flip 5 properties and you really didn't want to buy more properties or keep on going, you want to take a break, all of that stuff you can sell to your trust sells it, and all of that capital gains is deferred in perpetuity. So yeah, that's a really cool way. Most people don't know a lot of that stuff. And it's just wild that you can do that. I mean, that's what all the crazy wealthy people do. So yes, sir, flippers can do that, man. Kristen, Mike, you guys got anything? Laura? All right, Alex, I'll see you later, sir. Joe, Andrew, you guys good?
Can you hear me,
Stephanie,
Thomas?
Kim, I can
Actually,
hear you,
Thomas,
Rick.
I have a question, Thomas. Hey, so what were
Yeah.
the first couple things you got to get started? Did you start at LLCs first, or like what were the first couple steps? I'm kind of curious how you really got started to really get set up the right way.
Who's that?
Andrew, this is Andrew.
Andrew. Say that
Yeah.
again. What did I start off with?
Yeah, what was the first thing you kind of did to start out with? Did you get an LLC going first and then obviously build up from there, or what were the first
Yeah,
couple?
man. I mean, so when I met with a CPA originally in the beginning, like if you're making under 65 grand, I mean, the break even is right around there, right? For the expenses. So, I would just do a sole proprietor until you break like 65, 70 grand. And once you do that, you just get an LLC taxes and S corp, which you can go on LegalZoom, or if you want to do a lot of that stuff yourself, you can go IRS. You can go to the state and do a lot of yourself. We just go to LegalZoom and we just open up LLCs and then LLCs taxes S corps. Because essentially what I want to what you want people to do. Let's say you're a teacher, right? Or you work for like we have a relative that's a firefighter. He likes to go shooting. He likes to go. He does all. He's like a man's man, right? So I'm like, hey, you like to do all this stuff. He's opening up an LLC, and it's going to be like a leadership LLC, right? Like a leadership and training, and he loves going hunting, so he's doing all of that as part of his LLC. So stuff he is already doing, right, and already spending money on, right, and then now he just is able to write it off. So before he opened up the business, it's just an expense and it's just going in and out, right? And then now he's opening up a business, and now he can use all that as a write-off. So when he goes hunting or buys more guns and things like that, all of the stuff you normally spend, right? Having a birthday party, you don't have a birthday party, you have a networking event. You don't go on vacation. You have your annual board of advisors meeting with your family, with your kids you hire, right? Like you do the same stuff. You just categorize it all different, right? We're all used to like, hey, you go out to eat and you can write off your meals if you talk business, or if your mileage, and that's all like regular standard stuff. But this stuff is a little bit more, you have to do a little bit more work. But yeah, start off with LLC. What were you saying, Rick? I know you're probably getting tired.
Survey, Thomas, and
What's
you get
that?
rid of it, you get depreciation down after 5 years to zero. What do you pay? Don't you lose the deduction?
Yeah, you're talking about once you use it all and you try to sell it, and
Yes.
about recapture and all that.
Yep.
Yep, that's why. So you sell it. So you get those like ecclesiastic trusts or those family foundations, and then you roll it over into those family foundations, and then you don't pay any capital gains.
We gotta start a church.
Yep, you gotta start a church. And you know what's crazy? Like we have a nonprofit, and it took us like almost 2 years to try to get nonprofit status with that kind of stuff, like with ecclesiastic trusts or the family foundations, stuff like that. You get the 501(c)(3) right away. It's crazy. Like there's no waiting, right? So we try to start a nonprofit and do all that stuff. It's long, drawn out process and a lot of paperwork. With this stuff, right away, you get approved right away.
Where you
So
depreciate down to zero, and then afterwards, if it's in that ecclesiastic trust, you're not paying You still,
Correct.
so you haven't
It's not-
lost the depreciation deduction.
Yeah, you don't, yeah, so it's not like you're not paying, but you just defer it in perpetuity. You roll it into, you just roll it into an irrevocable, and then, so, I mean, you're gonna pay it, 500 years from now or whatever, whenever you keep on rolling down, but
Is your information, is it still, as long as we keep the rentals until we die and the kids inherit at market price still?
yeah, I mean, so they're looking into it, with what I forgot what the number is it depending on, how many millions you have, that you're rolling over. I mean, but as long as it's in the trust, I mean, it's not gonna be an issue. What they're really doing, and what I've seen, and I've talked to the attorneys, they just roll that money, and to access it, they just put it in life insurance, and then they borrow it back out. That's how they access all that money. They borrow it back out, and then they just, when they pass, it refunds it, and then it goes to another life insurance, and they just keep on kicking it down the road, and it just defers in perpetuity. So
And your information, Thomas, is that if I sell a house before I die, I'm gonna pay capital gains. If I die the next day, the kids inherit it, they inherit it at market price, they could sell it and no tax.
yeah, I mean, if you're having it in the trust, right? If you have it in the trust and they just control it, right? And they control it after you pass, they still won't be paying that stuff. It'll just keep on kicking the can down the road.
Okay,
So
but
even with their grandkids and their grandkids.
yeah, but I guess my question is, Thomas, I was told if I buy for 100,000, sell for 2 the day before I die, I'm gonna pay on the 100 grand capital gains.
Yeah,
If
but
I
that's
die and the kids inherit the next day, they can sell for 200 and pay no tax.
yeah, with the step up basis you're talking about.
Yeah,
Yeah, but that's if you have it in your business name or in your, yeah, if you have it in your business name. But if you transfer it to the trust, it'll just kick it down the road. It'll kick the can down the road. But the only issue again is, like, to get the money out of the trust, you throw it into life insurance and get it back out, but then you'll save the capital gains. So you're just playing games.
we've been using life insurance for about 25 years.
Yeah, I remember you were telling me about that. Yeah, you're one of the OGs with all that stuff. So have you been doing that, or like, so you use that when you buy flips, right? You do the same
Yeah,
thing?
just pay it out, deduct, and we pay interest each year, and then we get to deduct the interest as well.
Yeah.
It's a sweet setup.
Yeah, it's a sweet setup. That's how the crazy wealthy do it. But so now it's maybe, so I can get you in contact with the attorney. He's out of Utah, and he does it in all 50 states. He told me he did something exactly what I'm telling you right now. Like, he just a huge he did $100 million crypto one, which is the same thing as, it gets taxed the same as real estate, but he just did the exact same thing and didn't pay any capital gains.
Wow.
So I'm like, you're crazy. I was like, I had no idea you could do that. I was like, let me make sure you do this in real estate or crypto, the same thing. He's like, yeah. He's like, we've done it multiple times. And I'm like, I had no idea. I mean, those trusts are expensive. They're not cheap to do it, but I mean, they're cheaper than paying, 30, 40, 50% capital gains, depending on, or crypto.
Yep,
So,
yep.
but you're doing everything else already. I mean, you're like you're the, you've been there, done that,
I'm
right?
just
So,
older, Thomas, and I've done all the stupid things up before already. Pay my
yeah,
dues.
yeah, that's what it is, right? You guys always say we go to the, sometimes we just pay our dues in the school of hard knocks, and right,
That's right.
we get our education somehow, and you've seen me get my education a bunch of times, getting kicked in the butt. So,
All good, all good.
yeah, no, I love it. I mean, the only way that you lose is or you fail is if you give up, and so it's just keep on keeping on, and it just makes you stronger, right? It just makes you
That's
stronger.
right. Yeah, absolutely. All
So,
right, good job. Excellent job, Thomas. So thank you.
I appreciate it. I appreciate it, guys. Hey, thank you so much for coming on. Does anyone have anything else before I jump off? Belinda, any of you guys, Trinity, Noe?
Hey, Thomas, I have another question if you don't mind.
Yeah, no, for sure.
Uh, do you think that there would be an economical slowdown in the next near future? And if there was, how would you prepare yourself to try to capitalize from an economic slowdown?
Yeah, man, you want me to get my tinfoil hat on right now?
I mean the
No, no. So
we've surpassed like the average like economical cycle, right? Like we've already superseded it
yeah,
by several
way,
years.
yeah, yeah. No, man. I mean, that's a great question. So my opinion, this is my opinion. You take it how it is, right? The government has $5 trillion to refinance this year, right? I think this year is going to be very vanilla. I mean, next year there's a guy, a big financial advisor that I follow. He's calling it the great melt up, not the great meltdown, but the great melt up. Meaning the only way that we are going and going to be going forward in this crazy world we're going in, especially with technology and everything, like is one, you're going to see some crazy things with AI and everything. You've already seen it, right? And that is going to really push the market up. So we'll probably, like I said earlier, the government does not want us to go into recession. They rather us have massive inflation than go into a recession, right? So what they're going to do is just keep on printing money out. So we are, like I said, 2020 until like it's like before and after Jesus, right? Like after, like it's just a new world. Old Testament, New Testament, it's just brand new. Like 2020 was that time. So what I really do see coming up, I see 2025, very basic year. I think it's going to get ramped up next year. You're going to see you already see the crazy tech stuff going on. I mean, have you seen what's that app? Have you seen that new app? Let me see.
You're talking about like the new company that just came up out of China with the AI.
Yeah, dude, it was that. I mean, they DeepSeek from China. I mean, they just revolutionized everything in AI, and they just wiped $1 trillion out of the stock market. Right. So you're seeing this, and then now, but what you're going to see that it's going to go down, and then you're going to see it shoot up. Because like DeepSeek, what they did is essentially like, hey, all these AI companies, right? Like now, I mean, like Gronk, ChatGPT, they're spending hundreds and tens of billions of dollars to program all these AIs. DeepSeek is way advanced, and they did it for like 20 million with like less technology. You know what I mean? So now you're just gonna see this huge, we're just gonna go into the RoboCop era, man. Like I mean, that's the reality of what we're going into. We are going into an era where money is gonna be like water, right? You know, it's gonna be like water, and you're gonna see the middle class is a new thing with the last 100 years. It's a new thing in the last 80 years, right? There was poor and rich, and that's what we're going to go back to. So that's why financial education, like right now, especially you're making good money, is super important, right? Knowing this stuff. So to prepare for it, dude, if you look in this next 10 years in our area too, like just think about it. Right? We have a shortage on houses. They're building. I mean, I would buy as much as you can now and just have a long-term view. Like if you can buy houses, buy as much as you can, hold it, do what we're talking about now, throw it into trust, borrow money against it, and buy more houses. That's what all the wealthy are doing. They're not waiting for the interest rates to come down, right? They're not waiting for them to come down. They're buying them now. Like I said, like losing $1,000 a month on cash flow, but then depreciating the crap out of them, right? And writing off their active income, right? So they might not make the monthly cash flow, but what they're going to be paying at the government is going to make a lot more money in their pockets. And then with this appreciation coming up, if you buy something now in the next 5 years, like it's going to be crazy, right? If this, on top of our place growing here, right, with the high-speed rail probably in 10 years, 15 years from now, if you have a really long vision, I mean, that's going to open up stuff. I mean, downtown Hanford, Kings County's growing. All these places are growing. I mean, people like the Central Valley. So what I would say is be very smart with your money. What I would say is invest in I know you're talking about you know wholesaling and different stuff. I mean, those are awesome. Those are awesome stuff. I would say buy as many properties as you can and write off your active income with, those junk movers and anything, your wife's doing, write off all your active income. Don't pay any taxes and just use that money to just keep on going. We are going to have a couple meetings and more webinars, and we're going to have like a sit down with the CPA. He's going to go over all this stuff. We are going to have, there's some really cool stuff too. Like with, I jumped into it a little bit and I was just doing too much. So I had to back off, but I met somebody who got licensed in it recently now too, with business funding, 0% business funding, and they're doing it, and they're doing it at a good level, and they have access to all these banks and all that stuff. I would really start structuring yourself to have access to as much money as you can. And I wouldn't wait. I would structure it to get as much money as you can. So when an opportunity comes, you can jump. Right. So if you have houses, you have your, the commercial property, whatever you're going to be getting, you know what I mean? You're jump into that stuff and jump into as much as you can. I think commercially too, like this is probably going to be a good time. These next couple of years are probably a really good time to get commercial properties or get properties with land and build ADUs and stuff on them. We got good contractors we're pricing out doing stuff on our property. Like, I mean, right now is going to be a good time to do that. Just get as much access to as much money as you can just on standby to be able to pull the trigger, because everything is going to be going up in these next few years. That's a great question. Really, really good question. You shows you have foresight and you're trying to plan ahead. Because that's what I'm trying to do too. We're trying. Rick, Cam, and you guys got any more questions?
Privately, you're gonna get a phone call tomorrow.
What's that?
Privately, you're gonna get a phone call tomorrow with a couple more questions.
Okay, you want me to chat on the phone offline?
Yeah.
Gotcha.
Thomas, if we have a corporation and we W-2 ourselves into that corporation, can we still use those tax hacks?
Yeah, so that's a good question, right? So when they say, you have to give yourself a good, reasonable income. So you pay yourself 20, 30 grand, 40 grand, whatever. Yeah, you can still, the same thing, right? So you're W-2ing yourself. You can still have your normal and everyday thing. Your regular write-offs. Like you can pay yourself, and then you can set up that Ecclesiastes trust, and you can dump 30 to 60% of your adjusted gross income as a W-2 employee into that, right? Into that Ecclesiastes trust. And in that Ecclesiastes trust, the only thing is you have to donate 5% of whatever's in there every year to something, right? So to some kind of charity, right? So you can just be involved in your community, and things like that. What I would say, if you're trying to not pay taxes on some of that, like you can, you W-2 yourself, and then you just do distributions, right? You just pay yourself distributions, and then you don't have to pay taxes on that stuff. So you kind of do a mix. If actually on that, I think on one of the examples I had, they paid $40,000 for a W-2, and then they did 60 grand of distributions tax free to the owner. So if you're trying to just access money without paying it, and then you can just write off those things. That's a good question. You guys asked some good questions. Man, they're hard questions.
Hey Thomas, it's Erica and the boys.
Hey.
So
what's up,
just
Erica?
quick, hey, so just quick question, where would the three of us get started? So Mikey's only 19, Nathan's 16, but I'm trying to get them interested now. So I would kind of be like their workhorse. Would it be smart for us to start with LLC and a trust? Where would we, as just a small family, start?
Yeah, no, for sure. I would say, with what you guys got going on, I would get an LLC, and I would get a trust, because you guys have properties, you know what I mean? You have stuff, and you don't want to go to probate, and pay 25, 30 grand in probate, whatever. So yeah, one, you want to protect what you have, now, right? And then really it just be what goals you have, right? So it's, you and the boys, what do you want? Maybe we sit down and saying, hey, what does things look like? Where do you want to go? What do you want to do? And the cool thing is like people think like, hey, I have to make money, right? You have 3 years really to not make any money. You can make zero money and do research and development for 3 years, and the government is not going to blink, right? And then after 3 years, you can, if you're not making any money, you can shut down that business, right? But the cool thing is too, you can just start another business back up right after. And I've learned cool things too. Like you can buy shelf companies and you just buy, so you can buy the EIN, which is a business's social security number. And you can buy those of companies that have been open for a long time. So if you wanted, what I would recommend, and I would, for all you guys, everyone, right? If you are wanting to do something and open up a business, I would recommend you to look up shelf companies, right? This is super insider stuff, man. I paid so much money to find this stuff out, man. Giving you guys the stuff. So you buy a shelf company. And why I'm saying this is because I'll tell you in a minute. So you buy a company that's at least been open for 2 years, right? And I highly recommend you only buy the companies that have never done any business. So there's companies out there that literally just buy EINs, companies, social security numbers, and they label the company ABC123 company. And then they just pay the annual fee to keep it open. That's all they do. It's like buying domain names, if that makes sense, right? It's like buying domain names. And then if you want it, like you just pay more because I bought the domain name 5 years ago, right? So same thing with businesses. And then if you buy one, so that's what I would say for you, Erica, like do that. If you're going to open up a business, buy that. That way you have access. You can go to these banks and you can get business funding right away. Like right away. And you can get, if your credit is decent, which it is, I know it is, like you can get 0% interest funding right away. I'm talking tens of thousands of dollars, right? And so that kind of opens it up for you. If you know you can access tens of thousands, like that's the hard part, right? Like Erica, like you got to really look in and dial in your goals, because if I'm saying, hey, we can do all this stuff for you, we can, we have the contacts to set all this stuff up, right? Like the hard part is like if we can get you 50 grand and $100,000 in 6 months at 0% interest funding for 18 to 24 months, like what would you do with it? Right. So I think the plan is going to be, you have to get crystal clear on the plan and then just implement. And I'm not saying you have to be perfect, because businesses fail all the time, but just like personal credit cards, right? Which is crazy. Just like personal credit cards, once you're, if you're doing that 0% interest and you start running close to that date where it's going to throw it with interest, you can just roll it into another one for another 18 to 24 months. It's so crazy. So same thing you do on a regular credit card, you can do the same thing with businesses and just add a couple zeros to it, and you can do the same thing. So that's what I'm saying. Financial education is knowing this stuff and knowing how to implement it is going to be really, really important, and being very clear on what winning looks like for you and the boys, and what you want to do. So I think if that answered anything for you, I think that's where, yeah, definitely start there. That's a great question.
Thank you, Thomas.
Yeah, for sure. Andrew, Shay, Kim, any guys? Anything, Noe, Trinity? I know Rick's just waiting me to call him. I love these conversations with you, Rick. They're always great. So, all right, guys. Well, I appreciate your time. I know it's late. We've been here for an hour, so I really am honored that you guys came and jumped on. And bless you, Rick. All right, guys.
Thomas,
Yeah.
did you just say you can I go get $100,000 at zero interest and then roll it to move it to another credit card? Did you just say that?
I did. I just said that.
That's cool, Thomas.
It's nuts, right? I mean, who knew this stuff? Right? We paid. I mean, is Josephine still on here? No. Yeah, I mean, I mean, we paid, I think I paid like $6,000 for a course to do all that stuff. And I'm like, man, started doing it just with everything that's going on. So we learned how to do all this stuff, and I just don't have the time. So we did get some of them, and we have used it, and I just haven't had the time to really dive in deep with all this stuff. But yeah, it's real. It's very real. And the business funding is way different than, it's very similar and different at the same time, because with the business funding, you can go to specific banks that only go to TransUnion, who only report to TransUnion, who only report to Equifax, who only report to the other one, and Dun and Bradstreet. Some banks only report to certain ones, so they only let you, like, this is how crazy this is, Rick. Like, if you structure right, it's called credit stacking. You can go to 3 banks of TransUnion and get $20,000 0% interest credit cards. You go to another 3 banks that only report to Equifax, and you get $20,000 on those. And then you can go to other banks that only report to the other one and just get the same thing. And there's like all these, and I've seen it and we've done it. Like, it's just wild. Like, we have a list of what each bank, some of them do 2, some of them do all 3, but we have a list. Like I said, we bought that course, and I mean, we have a list of what each bank, like, who they report to. And you just need to,
So you have to,
like
keep track of which bank goes to which.
yeah, that's what I'm saying. Yeah, you do. Like, so you have to have somebody to keep track and time frame, and then knowing all that stuff. But I mean, that's why I said it's very important to be very clear on what winning or the end game looks like. You know what I mean? Because you have to know what winning looks like. And if it comes down to, like, if they give it to you for 18 months, which a lot of them are around 12 to 18 months, you do have some that are 24 months, but a lot of them are 12 to 18 months. And then when you do those and it starts coming towards the end, you want to do it maybe 6 months ahead of time, and then reopen up new ones with new banks, and then just do just like you do with your regular credit cards, you just do a balance transfer. And then you just roll it over.
That's fascinating, Thomas, fascinating.
Right?
Yep.
Crazy.
All right. Good job, Thomas.
What's that?
Good job.
Oh, thank you, Rick. See, I'm glad I got fined that one time, and you met me in the board, right? My first listing, I got fined, and I had to go to the board, and I met Rick Rossiter. I was like crying. I was like, I'm poor, and they're fining me like $500 on my first listing, and I had no idea. And we had a good conversation, and look at that, man. Like, it's become a beautiful relationship.
Here we are, and here you are, Thomas. Good, outstanding.
Oh, fun stuff, man. Well, all right, you guys have a blessed night. We appreciate you all. If you need anything, hey, reach out. We're here. We'd love to serve you guys and just help out anyway. Thank you guys for being on here. Bye, guys.